Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to do a mortgage rate update, and then we're also going to talk about China. China, these crazy sons of guns, which actually kind of makes sense because the way that they're doing things in China with the housing development and the crisis that is within real estate, it's taking a big effect on them. We're going to talk about what these developers are actually offering, how much are they actually in debt, and what they're actually going to go do to counter it. So let's get on with the mortgage rate update. We're going to go ahead and price out 10 mortgaging products as of 7/18/2022. 30-year fix will be sitting at 4.85%. 15-year fix will be sitting at 3.8%. 30-year jumbo will be sitting at 5.25%. Debt service covered ratio. Now, debt service covered ratio is just a loan that is covering the debt to the servicing of the property. So let's say the debt is going to be your principal, interest, taxes, insurance. Then the servicing is going to be a loan program, the rental income that you have coming in. So for instance, the debt is going to be your principal, taxes, insurance. Then the rental income that is going to come in, that is going to be the servicing part of it. And then of course covered ratio. This is a no income, no asset type of loan that you can go ahead and do. It's primarily for investors. Bank statement loans, where you just go ahead and look at the liabilities and the total deposits coming into your bank statements. You don't have to worry about W-2s or anything like that. Bank statement loans will be sitting at 7.5%. FHA 30-year will be sitting at 4.08%. 7.6 adjustable rate mortgage will be sitting at 4.81%. USDA 30-year fix is one of the zero down payment programs in rural areas. That is sitting at 4.12%. VA 30-year fix will be sitting at 4.8%, and hard money fix and flips will be sitting at 9.15%, which is actually pretty cool because this is the first time that it actually came down in a little bit. So home buyers in China are boycotting mortgage payments, deepening the country's real estate crisis and fueling fears of contagion. Now, the first question is going to be, why are people not paying their mortgages, and how is this affecting it? Well, they're not paying it because the lockdowns are very real in China right now. There's still like the things that are going on. Now, I personally have not been to China. I don't know what it's like to be in China right now. So I'm not quite sure exactly if all of the news is true, but according to this, if all these people are stopping paying their mortgage payments, and get this, okay? So not only do these people stop paying their mortgage payments, developers are like, in this really crappy position right now where you're like, what do we do? So they're offering them free cars. They're taking like garlic as down payment. They're giving them pigs. Who the hell gives a pig when with the purchase of home? Hey, yeah, by the way, if you go ahead and buy this beautiful condo here, we're gonna go give you a 250 pound pig as a consolidation. What? But the reason why it is important to go ahead, and you're like, the reason why this is so important is because China actually has the second biggest economic footprint that we have next to America. America has United States of America, of course. Here in America, we hold the number one biggest spot. Number two is going to be China. Now, there's a bunch of different stock exchanges, huge amount, which I'll go ahead and flash this up. Now, you can see that they're in the $10 trillion range. Now, if they stop paying, which is about, 660 million won, which equivalents to about $286 billion in USD. Now, if they stop paying, that means that this could have a ripple effect. Like here in the United States, back in 2008 when we had the mortgage crisis, the things that we did here in America was a ripple effect across all markets. Because the New York Stock Exchange, of course, is the biggest one. They hold these mortgage-backed securities, and when they hold these mortgage-backed securities, if that dumps, everything kind of takes a tank with it. Well, they hold a big chunk of that too. So if majority of these people if everybody all of a sudden stops paying their mortgage, developers stop developing because they don't know what they're doing. Because people, if they stop paying their mortgages, then what are you going to do? So this could have a ripple effect that could go ahead and slew into our today's market, could kind of come into the American market, and then we could go ahead and just all be... Banks are rushing to reassure investors that risk from loans to home buyers were controllable. And then whenever you have somebody reassuring you that everything is okay, you know what that means? That means nothing is okay. That means everything is completely to shit. Everybody is hating life right now. With at least 10 firms issuing statements which is another thing. If you're issuing a statement, nobody's really that stupid. We're not idiots. We know that you're issuing a statement because you're in deep shit. You're not doing too hot. Everybody is in a bad state. State-owned Agricultural Bank of China said it held 660 million won of overdue loans of unfinished homes. So these are mortgage payments on unfinished homes. So what does that essentially mean? So they do things a little bit differently in China. If you're going to go ahead and buy a place and it is in the process of being development, your mortgage payment starts when the development starts. It doesn't start from the day that you move in. Like here in America, you don't pay for anything. You put an earnest money deposit down, and once you put your earnest money deposit down, then you wait till the conclusion of the project goes, or the development, and once a house is all the way built up, then you start paying your mortgage payment, because that's when it starts and that's when we close on our thing. But not in China. China, you start paying once you put that down payment. But they're doing the craziest shit ever. They're giving you jobs, they're giving you pigs, they're giving you cars, they're giving you all this stuff. Now, if this continues, and China does decide that they're not going to go ahead, the Chinese people as a whole, if they decide that they're not going to pay their mortgage payments, it's just not going to happen. I don't care what you offer me, I don't care what you get, because over the past 2 decades, the property values have increased. I believe it's like about 400%, which is hindering, especially because lockdowns and everything is still a really, really big part. But that's going to be your mortgage rate update for up to 50% commission rebate, 0% listing on buying your next home, or 0% listing fee. Link in the description below. Until next video, guys, we're going to keep an eye on this. And the 27th of this month is going to be the Fed rate hike. Now, the Fed rate hike is something, another big deal is that how much are they actually going to hit us? Now, I say that they're probably going to hit us again at the same, probably 75 basis points, which is stupid because they're just going to keep doing it again. I hope they just hit us really, really hard, but that's going to go ahead and predict where the interest rates are going to be as follows. Now, if they do what happened last time, is with the market pre-primed itself, the interest rates could probably potentially hit us higher this upcoming week. Because today we are at the 18th, probably in the 23rd, 24th, because the Fed rate hike is going to be on the 27th. We could see that again because there's going to be some uncertainty in the market. But keep up to date, like, subscribe, comment, keep up to date on exactly what the mortgage rates are doing, where we're going to be at, and how the Fed rate hike is going to go ahead and affect housing and mortgaging as a whole. So, till next video, guys, peace.